All right, well, childhood favorites and new original content are soon going to be just a click away as Disney prepares to launch its own streaming service, something that we're going to be paying attention to with these earnings later on. There's still no name for it, but it is expected to hit the web late next year, competing with Netflix, Amazon, Prime Video, of course, this joint venture between Meg Whitman and Jeffrey Katzenberg as well.
New TV.
New TV, that's right. Joining us now is Elaine Lowe. She's a reporter and producer at Investors Business Daily. Elaine, it's great to have you with us here. What sort of content can we expect from this new platform?
So Disney CEO Bob Iger has said that he expects this to, to be a destination for Marvel, Pixar, Lucasfilm, and Disney content. And so far, we've seen from some industry reports some of these titles that are trickling out, including spin-offs of High School Musical and Monsters, Inc. on the TV side, as well as 2 Star Wars series, 1 live-action Star Wars series that's going to cost about reportedly $100 million for 10 episodes. And on the movie side, Iger has already promised 4 to 5 exclusive feature films for the streaming platform every year. The New York Times just reported that there are at least 9 movies in production or in development right now. And some of the titles we've seen are a live-action remake of Lady and the Tramp and the Sword of the Stone. Those are both animated features, as well as a reboot of 1987's 3 Men and a Baby. So there's a lot of content coming in just the first year or so alone, you would expect.
Still nostalgia.
Yeah, I was going to say 3 Men and a Baby. Wow.
And now it's on streaming too.
Elaine, at what point, I mean, look, we're still a year away from this becoming a reality, but if there's one company that can really take on Netflix and take on other streaming services, it's Disney with this type of content. Is there any chance that it's too little too late?
Oh, well, I don't know about that. I mean, Iger did say that he plans to make it, quote unquote, substantially lower price than Netflix. Netflix currently goes for about $8 to $14 a month, so it'll at least be competitive on the pricing front. And surely, as you're all aware, Disney has this huge pipeline of content. There's a mega library, years and years. They said they were going to make thousands of episodes of content available just from their catalog alone, let alone all of this new content that they're planning on creating. And the New York Times said that on the movie side, the budget for that is about $20 to $60 million. And then on the TV side, about $25 to $35 million per series. So they're pouring some serious money into it. Although, you know, as you mentioned, Netflix being a major competitor, I mean, they're pouring, what, $8 billion into content this year?
Yeah, $8 billion into content this year. You talked about the content, the money that they're going to be spending on content. It's also for exclusive content for Disney. If it's cheaper than Netflix, how are they going to make the economics of this work? Look at, in terms of Netflix's earnings, I mean, that company is still cash flow negative.
That's a good question. You know, we don't have any real line of sight into their path to monetization yet. They haven't offered a lot of details in that way. Maybe we'll get some clarity on the call later today. But we do know that Disney has many profitable sectors. Their theme parks and resorts segment has traditionally been very strong for them, expecting another strong results from that sector again today. Studios has also done pretty well for them.
Elaine, let's talk about ESPN Plus. This is the streaming service that it launched this year. This earnings report that we get this afternoon, the first full quarter, the ESPN Plus has been in existence. What are you expecting from that platform in terms of the numbers? It, in some ways, seems like a bellwether, or right, at least a glimpse of what could be in store, right, for the larger streaming service that we get later on next year.
Definitely. So I think this may prove to be a good testing ground for what kind of appetite there is for additional streaming content. I mean, if you're a household that already subscribes to Netflix and Amazon and Hulu, you're really taking a look at your budget to see, do I have room to add on another streaming platform? And ESPN Plus is going for about $5 a month. So hopefully they'll break down some of those user figures today in the earnings call after the close.
It's so interesting that you brought up all those other platforms, because I don't necessarily think of those in terms of competing with ESPN Plus. I think of them more as competing with Disney's new streaming offering, because they're more focused on entertainment. Where do you see Disney's new direct-consumer streaming offering that they're offering a year from now? Where do you see that falling into the ecosystem that we know right now with Amazon, with Hulu, with Netflix? Is it a complement or is it a supplement?
Well, I mean, it could be a compliment in the way that they'll be pulling a lot of their Marvel and Lucasfilm. They'll be pulling all of their Marvel and Lucasfilm movies from Netflix, so Netflix won't be able to carry those anymore. They'll still have their Marvel-themed shows in partnership with Disney, but Disney will now be the keeper, the gatekeeper, so to speak, for these newer Star Wars series. And they have a lot of precious intellectual property, including their Pixar, Star Wars, Marvel series. I mean, look at how well Avengers Infinity War alone did this past quarter.
Elaine, it seems like obviously with direct-to-consumer and OTT becoming just more of the reality, right? Obviously people cutting the cord or just never having a cable package to begin with, that if Disney puts enough content on this platform, there will be demand for it, even though it is late to the game. But Disney's still a well-established brand. Overnight, early this morning, we're hearing that Jeffrey Katzenberg, of course, a longtime industry veteran, as well as Meg Whitman, are going to be unveiling New TV, another streaming service platform specifically for mobile, though, when it comes to 2019. And so as these other services try to pop up, and if they don't have, obviously, the firepower, the brand, the balance sheet that Disney has, how does a company, a new venture like a New TV, make it in a world where it doesn't even unveil this new mobile service until the end of 2019?
Right. So it's kind of an experimental ground almost for a lot of these new streaming services like Katzenberg and Whitman's new TV, I guess. But given the cash infusion that it's also gotten from a lot of major industry players, I mean, for this $1 billion seed funding round, they've received money from Disney, Alibaba, Comcast. They also have a lot of other very traditional studios and media titans investing in this. So certainly everybody seems to want to have a little stake in the game in case it winds up blowing up into something big. But in terms of having very highly produced short form content, I don't know how that's necessarily going to perform. I mean, you look at Verizon shuttering their Go 90 platform, which was also a short form mobile content platform. I don't know what that means in terms of the appetite for highly produced mobile content.
Elaine Lowe, reporter and producer at Investors Business Daily. We're going to have to leave it there. Thanks so much for joining us on Cheddar this morning.
Thanks for having me.
A lot of eyes on this Disney report after hours.